Hi, my name is Sabrina Maples, and I have made about $500,000 in the last couple of years in my spare time. I quit my 9 to 5 and have replaced that salary by flipping houses. And I want to share with you guys how I did that so you guys can get out of the 9 to 5 grind as well. What we're going to go over in this video today is how to finance those flips. We can start with little to no money, a little bit of money, and if you own a house, how you can leverage your own house to finance those flip deals. So if you're interested, keep on watching. So here's the first way to start flipping homes or financing your first deal. And I know a lot of people don't just have $100,000 laying around. So if you happen to be one of those people, a way for you to get into flipping homes in that manner with little to no money is try to find an investor that's already flipping homes or somebody who has extra cash that's interested in the flipping. And as you learn with me how to flip the house, you can bring your money partner in and they can fund the deal for you. Finding a deal to flip is just as valuable as having the money for the flip. So if you don't have the money and you want to start doing this and you know somebody that is willing to partner with you, that is an option. I always warn people, coaching clients, my own clients, anybody that I'm talking to, if you do partner with somebody, you're basically becoming married to them. And you're also using their personal money that they've worked hard and saved and done whatever they've had to do to get. So I don't take partnerships lightly. So if you do choose to go the partnership route, make sure it's somebody that you trust. Make sure that you guys have a written agreement of some sort so that in case things do get hairy, especially on a project, like, tensions may get high at some point, you're going to want something in order to make sure that you don't lose your relationship in part of this investing journey that you're going to go on. And I think that's very, very important. So if you do choose this route, I recommend having a written agreement as you guys sit down and you guys are still peaceful with each other. And, hopefully you go through the whole project and you have no drama, and that would be ideal. But if drama does come, it's always, I guess, beneficial to have this agreement while tensions are not there so that you can refer to this black and white rule set, when you when you are up shit creek without a paddle. So little to no money, find the deal for the investor will come to you, and then I can guide you the rest of the way through that flip in that manner if you choose that route. This option is for people who already own a home and they have a little bit of equity in it. This is how I funded my first project. Was I took a cash out refi on my house. I bought that house as a fixer property and I had been living in it for about a year or two. And because I had put some sweat equity into that house, I had it reappraised and I had about $100,000 I could play with within the equity of the house that I lived in. So what I did was a cashed out refi. I pulled out some of my equity and I went and funded my first deal. That's the way that you can do it also if you don't have a lot of cash on hand, but you have a lot of equity in your home. The other way you can use your home in the same manner without pulling the equity completely out is a HELOC. And what a HELOC is basically a line of credit on that equity in your home. So it's almost like like a credit card for the equity in your house. Say you only owe 300,000, but your house is worth 500,000. A traditional bank will usually give you about 75% of your LTV, which is a 500,000. So they would give you about 400,000 line of credit for your house. And if you owe 300, you basically unlocked $100,000 credit card for yourself. You take that $100,000, you cash it out, and you put it in your bank account. Then you use that money to fund a hard money loan, and that's how you would be able to fund your first project using your house. The benefit of using a HELOC is that it's just like a credit card, but it's for your house. The downside of the HELOC is it does have an adjustable rate, an adjustable interest rate. So if the market rates change, if they go up or down, so will your interest rate on your HELOC. So that's why it's ideal to use it on a flip project, because ideally you're going to buy this flip, you're going to be done in 2 or 3 months, and you're going to immediately put your HELOC money back into your house, and put your equity back into your house, and then you've done your flip project. So HELOCs are a little different from the cash out refi in the sense that the rate will adjust, versus cash out refi. You are pulling the money out and you're refinancing your entire loan. So your mortgage payment in that manner will end up going up a little bit, versus HELOC, it doesn't affect your mortgage payment. You have a separate loan, kind of like a car payment. But if you own a home and you have equity in it, this is another way to get a large chunk of access to money to fund your first flip deal. So the next way to finance your flip is basically a hard money loan. This is going to be for the people who already have, like, I don't know, 60 to 100,000 cash in a savings account. They don't know what to do with it. This is what you're going to use to fund your first flip project. The hard money loans work very similarly to a traditional loan, but there are a couple big differences. So hard money loans are not funneled through the traditional banking system. So you don't need 2 years tax returns to fund a hard money loan. You don't usually need like really good credit score. You don't even really need to have a job. Like the hard money loan is based on 20% down if you have that cash, as well as points. And what points are basically a percentage of what your rehab budget is to pay up front to fund the loan. So it would be basically costs of getting the hard money loan. So for example, if you had a $300,000 house that you're trying to buy and you need a hard money loan on it, most lenders will charge between 2 and 3 points, which would equal $6,000 to $9,000 just to get that loan. Typically with hard money loans, you also need 20% down. So say same $300,000 house, you're going to need $60,000 just as a down payment for that loan. And then the other difference between a hard money loan and a regular traditional loan is hard money loans tend to have higher interest rates because they work as cash. They don't work like a regular traditional bank. So usually, at least right now in our market, it's about 9 to 12% interest rate, as the regular banking interest rate is around 7. So you could always kind of estimate it's going to be about 3 to 5% higher than what you would get as a traditional buyer in a bank. The other thing with hard money loans, they are short term. They are designed for flipping houses and refinancing if you choose to keep the house. So the terms on a hard money loan are usually 6 months is the shortest thing I've ever seen, up to 18 months. And then some hard money loans have pre-penalty payments. Some of them have payments to extend the loan. So say you have a 6-month loan, but your project's not done yet and you need it to 9 months. There's a fee to extend that loan to 9 months. The other thing is some of the hard money lenders will do draws and actually fund your rehab for you. So for example, say this $300,000 house, it needs $100,000 of work. And when you sell it, it's going to be worth $600,000. So 300,000 plus your 100,000 in rehab equals 400,000. The hard money lender is still going to want your 20% down. So 20% of 400,000 is 80,000. What they'll do is they'll take your 80,000. And then when you start construction, you hire your GC, you put your down payment down with the GC. Once your GC starts finishing projects, say there's drywall and there's insulation and mudding and taping has been done, then the hard money company will send out an appraiser or somebody to look at the project to make sure some of the line items have been done, and they'll check it off the list, and then they'll reimburse you that money. So that's called a draw, the reimbursement process. So say your sheetrock, mudding, insulation, and taping cost you $5,000. Hard money lender will send somebody out to make sure that that part of the project is done, and then they'll give you your $5,000 back. And then they'll slowly give you that $100,000 as each part of the house is being flipped and done. So those are called draws. In that manner, you still need a chunk of money to pay the general contractor up front so that you can get the project started. And then over the length of time, the hard money lender will continue giving you back the money until you're done with the project. You sell the project, you give the hard money back, lender back their 400,000, and then you keep the profit, which in this scenario would probably be about 150,000. But those are how hard money loans work. They cost a little bit extra upfront. They cost a little more in interest. You have to put a bigger down payment down. But as far as being pre-qualified like a traditional lender, you don't have to go through all of that garbage. You just show them the property, they see the potential, they put the lien on the house, they give you your loan, they give you your rehab budget, and then you're going. But hard money loans, you do need 20% down. So it is a little buffer as far as like if you can do that upfront with cash versus a traditional lender, which you would need a lot less money down. Thank you so much for staying with me until the end of this video. I hope you learned a little something about the financing options you have for your first flip. And I have something special for you. So I am opening up my one-on-one coaching. I'm only taking a few people, and I am going to teach you the entire process of going through a flip, from finding your GC, finding the deal, what kind of property to go after, more into how to fund it, finishes that you're going to do on the flip, how you're going to list it, if you're going to stage it, how to find a good agent. There are so many little nuances of doing a flip. And this is why I'm taking very little people, so I can give you all the information and set you up so you can get a nice chunky little flip and have a success story that you can go repeat and teach your family and change your life and change your family's life and do all those things. So I am letting you know to book a discovery call right now, and I will see you there so I can teach you how to do the flipping.